Good day, friends. You're watching Tax Dosti videos, and we are talking about how to fill your business tax return. Basically, the tax return, the format that you're seeing on your screen, the format that you're seeing on your screen, this is called a normal tax return because it has all the heads of income, employment, property, business, capital assets, etc. So this is a normal tax return, and in it, you have to fill your income from business. And we are going through slowly and gradually. This is part two. In part one, we discussed these two columns, that is, gross revenue excluding sales tax and federal excise duty, selling expenses, freight or outward, etc. So a few questions were asked regarding sales that include sales tax, how to show them, and we will be discussing those and a few other things. So, the third point to understand is the gross revenue, that is your sales, and we are talking about especially those businesses which have stock and inventory, because those businesses that are purely service businesses, the second tab, that is called the other revenue tab, we may have to put the revenue figure here. But for most of the businesses, as we saw in part 1, the definition of business, the starting page or the starting tab is manufacturing and trading item. So when you put the figure here of gross revenue in this column, total amount, and if it's not exempt, and when you push this calculate button, this amount will come here as amount subject to normal taxation. And since we are talking about a sole proprietor and in business individuals tax return, so his income will be taxed according to the different tax slabs given in the tax law. So when you put the figure here, the third point to understand is this figure should be reconciled with the sales amount, with the gross revenue amount you have put or declared in your sales tax return. And since last year, the sales tax return, the federal sales tax return, is also filed within IRIS, and we'll be discussing that too. So you have to reconcile that amount with this amount, so that if both the amounts are either equal, or if there is a difference, you have the reconciliation which will show why gross sales of, for example, 15 lakhs or 25 lakhs or 300 million is showing here, and the X amount or Y amount is showing in the sales tax returns. So you have to be aware that the gross revenue shown here has to match what you have declared on a monthly basis and then on an annual basis in your sales tax return. This is your income tax return. The fourth point in question was raised that in sales tax law there is third schedule items, meaning that items where the manufacturers adds all the sales tax, that is 17%, and then the item moves throughout the supply chain to the final consumer, but the manufacturer pays all of the sales tax at once. So should the third schedule item be also split between their revenue shown here and their sales tax and federal excise excluded from here? So for that, we'll take an example of the accounts of Park Electronic Limited. A brief history about it. The common name of this company is Spell Electronics, and people know it by the consumer electronics that they sell, like fridges, TV, etc. They also sell power transformers and different infrastructure which is used in providing electricity to your homes or your businesses. So basically, this is a listed company on Pakistan Stock Exchange. These are the accounts for 2022, and the way they have shown their revenue and their sales tax, will we will use this example to see then how they have used this, shown this in their financial statements, and then how these figures will be shown in the income tax return. So first of all, this is the profit and loss account. They have shown revenue from contracts with customers. So you will, this means that all the items that they sell, consumer electronics as well as capital assets like power transformers, etc., they sell on contract to their customers. So their gross sale was 66 million, and the sales tax, excise duty, and discounts was 13 million. So 52 million was the net revenue. So what amount should be shown here? Should 66 million be shown here in gross revenue, or should 52 million should be shown here? So the answer is 52 million should be here, because sales tax, federal excise duty, including discounts, should be separated. And this is summary figure. Now let's see what this note number 35 will tell us. What is the total breakup of this? We'll go to their page number 83. Note number 35, this is notes to account of Park Electron Limited. This represents revenue: sale of goods, local sales 64 million, exports 6,63,000. So basically, both of these together make, and then construction contracts. So their total sales is 66 million, and their sales tax and excise duty is 9 million, and the trade discount. Now, interesting thing is that this sale of 66 million consists of two types of items. One is power transformers and capital assets, that is 55% of their sales, which is a taxable item, and it is not a third schedule item according to sales tax. It is a generally a normal section 3 item, and sales tax is charged on it, and as it moves through the supply chain, distributors and retailers add their sales tax. Whereas 45% of this 66 million sale consists of consumer electronics. So if you go to third schedule of Sales Tax Act 1990, and in entry number 38, the refrigerator, TV, and other consumer electronic goods are listed in third schedule, which means that Park Electronic, when it sells to its wholesaler and distributor, it pays all the 17% tax to the government, and it is the sales tax is attached to the retail price, and through the discounts, these discounts, trade discount of 4 million, through the discounts, the wholesaler, then the distributor, then the retailers earn their profits, and the final consumer then has to pay the retail price for the refrigerator as well as the sales tax price to the retailer, which is then sent to the manufacturer. So basically, even if you are selling third schedule items, and in this case 55% is normal items, taxable items under section 3, and 45% sale is of third schedule item. Even if you're doing that, you have to separate your sales tax and excise duty and your trade discount. So 52 million will appear here in the gross revenue, here in the total amount. Since none of that is exempt, so it will come under the amount subject to normal taxation. So here you can see that you have to separate your sales tax and federal, even if it's third schedule item or a normal selling price. If, for example, you are exempted from income tax, this amount will then come here. We will see some examples in the coming part. You're watching part 2 of the how to fill your business tax return. And some businesses may seem like they may not come under the head of business, and you may have to show them under the head of income from other sources. For that, we will see, and this is the last point, we will see that what businesses or what activities are to be shown under the head of business income. Let's see. Ji. For this, we'll go through the definition of income from business. Section 18 of Income Tax Ordinance 2001. The following incomes of a person, meaning a sole proprietor, partnership, company, for a tax year, other than income exempt from tax under this ordinance, meaning the income which will come under here, because normal taxation will only be charged for incomes which are entered here. If you enter 52 million here and then you enter 52 million here, for amounts subject to normal tax will be zero. So all amounts that are exempted, all business incomes, are then entered here also, and they do not go under the normal taxation. So that is why it's saying the following income of a person for a tax year, other than income exempt from tax under this ordinance, shall be chargeable to tax under the head income from business in the tax return. And what are those incomes or what are those activities? The profit and gains of any business. Now, in part 1, we have defined business to include trade, means all kind of trading shops that you have seen, trading, manufacturing, all manufacturers of every type. Then commerce, meaning accounting, business services, audit services, all of these, and including profession, meaning professional people and vocational people, meaning that engineers and mechanics and similarly doctors and all these, when they do it as a for profit basis, those incomes carried on by a person at any time during the year, meaning that it doesn't have to be, the business doesn't have to be carried on for the full year. Any profit and gains from the business, meaning all those activities like trade, commerce that we saw in the definition of business, will come under the head of income from business. So if you are doing any kind of business, so if you're running a shop, it's income from business. If you are renting out cars, rental business, that is also business. And any other activity for which includes which with the intention of gaining profits is called business. So this was the general definition, and it is common sense that this will come under income from business. Any income derived by any trade, profession, or similar associations from the sale of goods or provisions of services to its members. Now, this is a special type of scenario which has been included in income from business. If it was not included here, it may have been it may have to be shown under the head income from other sources, or it may become non-taxable. So income derived by any trade, professional, or similar association. So these are trade association like Chamber of Commerce, etc. And if they provide sale of goods or provision of services to their members, then any income earned will come here, income from business. And explanation is that it includes cooperative society, the income earned by cooperative society. Moving on, so this was a special scenario. This is also the other one. This C, clause C, is also a special scenario. Any income from hire or lease of tangible movable property, that is tangible movable property means equipment, plant and machinery, laptops, cars. So any bank or any person giving out these uh, and earning income from hire or lease mean giving it on installment or in installment with collateral, meaning lease. This income will come under income from business. It even includes those consumer items, those that give on washing machine and TV on installment. It those are tangible movable asset, and their income will come under this head. Now, why are we saying that this income should come under this head? Because people may distribute their different incomes. The first income, the main business, they are selling electronics on cash, they may put it here, income from business. For example, 70 lakh rupees or 7 million, and the other business part of giving on lease or installment tangible movable property, so giving the same washing machine or TV on installments, they may put it under income from other sources. So they will split the income. When the income is split, the tax will also be split. And in income from other sources, they will deduct some expenses, and in income from business, they will deduct some expenses. So they will end up with paying less tax. So this is one of the tricks, or one of the way you can reduce your taxation. Because if 70 million and 50 million, 7 million and 5 million of this installment income is grouped together under the income from business head, which it has to be done because the law is saying it. So you'll have to pay on 12 million tax. Whereas if you split that income into different heads, then your income tax may be reduced. Then there is the fair market value of benefit, meaning that a business person, if he gets any benefit from his clients or potential clients, that is also his business income, including if the State Bank of Pakistan waives off any interest or debt payable by the business under a special scheme or general scheme or amnesty scheme, that is also income. Now, the management companies, meaning asset management company or other management companies, these companies are providing services of advising, and where should their income become, under which head. So it will come under income from business, any management fee derived by management company, etc. Similarly, any profit on debt derived by a person, where the person income is chargeable to where the person's business is to derive such income, shall be chargeable to under the head income from business, and not under income from other sources. So if he is doing or she is doing business, then they have to uh, do it under this head. Similarly, where a lessor, being a scheduled bank or an investment bank, development finance, leasing company, has leased any, whether owned or not, to any other person, any amount paid or payable by the said person in connection with the lease of said asset shall be treated as the income of the said lessor. So this is the treatment of when a scheduled bank, investment bank, is acting as a lessor, meaning providing you or the business anything on lease, then that income will also be come under the income from business. And this is to stop businesses, banking businesses, from diverting their income under different heads, and then lowering their tax payable or tax liability. So this loophole has been plugged, or this practice has been stopped. Any amount received by banking company, non-banking company, where such amount represent distribution by a mutual fund or a private equity fund, meaning profits that are given out by private equity funds, venture capital funds, or business funds, to banking companies, since they invest their surplus money, or they regularly invest, these companies will come under the head income from business and not under the head income from other sources. And in the previous tax law, income tax ordinance 1979, this is income tax ordinance 2001, these questions were unanswered, so banks were able to split their income under different heads and lower their tax liability. So by mentioning them in this section 18, this practice has been stopped, and now you know that when a bank fills out its tax return, it has to follow these rules. And we were discussing the income tax return, how to fill for business, and we are in the manufacturing trading section. We have discussed a few more examples of how to put gross revenue. Next, we will see what business incomes are exempt for tax year 2023 and even onwards, and we'll be highlighting the second schedule for all the businesses, which will, when they will be filling their tax return, they will give gross revenue here, and after gross revenue they will enter here. So thank you very much. Have a nice day.